The SBI, management is speaking at the press conference. Let's cut across and hear out their views.
Cost was 0.38% and PCR is all-time high of 75.66%. The profit for the current quarter is 18,331 crores, up almost by 28% year on year. As far as in the part of business growth, I would like to make a special mention of the deposit growth, which we've been very seriously pursuing. At the end of Q2 FY25, deposits have crossed a milestone of 50 trillion rupees. I think this is a milestone which we crossed, and we stand at 51.17 trillion. We serve more than 50 crore customers. We are humbled to serve 1 out of every 3 Indians, but I take pride in saying that SBI in some manner touch every Indian family. The total deposits have grown by 9.13% year on year to 51.17 trillion. Term deposits have grown by 12.51% in year on year. Our current account deposits have grown by 10.05% year on year. And CASA remain at, grown by 4.24%, and we have maintained CASA ratio at more than 40%. So this is a good deposit story in our view. As far as credit growth is concerned, I am pleased to advise that the credit growth continues to be robust across all segments. Our domestic advances have grown by 15.55% year on year, driven by 18.35% growth in corporate, 17% in agriculture, and another 17% in SME, and 12.32% in retail segments. Our foreign offices advances have grown by 11.56% year on year in rupee terms. As regards asset quality, slippage ratio, as I mentioned earlier, is 0.51%, while the credit cost for Q2 FY25 stood at 0.38%. The net NPA ratio improved by 11 basis points year on year, stands at 0.53%. We have a well-provided NPA book, as mentioned earlier, with a PCR of 75.66%. These indicators of asset quality highlight the robust quality of our loan portfolio. As far as liquidity is concerned, our liquidity position is comfortable, with the liquidity coverage ratio being about 129% as on 30th September, while the domestic CD ratio was at 67.87%, indicating a significant potential to grow our credit portfolio. The bank remains well capitalized, and we have sufficient headroom to take care of business growth requirements. Our capital adequacy ratio is at 13.76% without considering plowback of profits, and is well above the regulatory requirement. And if we include the profits for H1 FY25, our CAR would be at 14.79%. As in the digital journey, I am happy to share that the progress we are making in digital banking is paying dividends. More than 8 crore customers have been registered on YONO, driving digital agenda of the bank. 61% of regular saving bank accounts are opened through YONO in Q2 FY25. Our subsidiaries are also consistently performing well and continue to create significant value for all the stakeholders. We will nurture these subsidiaries and maintain leadership position in the respective businesses. We are glad to report that the bank continues to report ROA and ROE greater than 1% and 20% respectively at the end of half year FY 2025. While we are glad about the outcomes in Q2 FY25, we are also mindful of areas for further improvement. On the liability side, we continue to focus on increasing our share in current account while maintaining our leadership position in savings bank deposits by further strengthening our customer outreach and branch network. Although our bank's cost base is substantial, it highlights our commitment to compliance and establishment expenses. From this strong position, our goal is to be consistently achieve ROE over 15% throughout business cycles. To conclude, I want to thank you all once again for your support and being there here. The bank, while pursuing its own progress, contributes to the progress and growth of the economy. We remain committed to rewarding our stakeholders' trust in us with superior sustainable returns over the long term. My team and I are now open to taking a few questions. Thank you.
Okay, so that's the management of SBI discussing their numbers and the fact that the asset quality has remained quite pristine, and they are expecting that the agriculture loan is expected to pick up from here on.
If you like this video, then like, share and subscribe to ET Now.